When you've just been shaken up with the largest single-day meltdown in the stock market, you need to ask that question. What can give my portfolio a shelter from the market storm? Is it real estate? Can investments in property cushion the stock market blow? Well, on this very timely debate, let me welcome the panelists, Kuldeep Chawla, Managing Partner, Commercial Real Estate, Milestone Capital Advisors, Amrish Baliga, Market Expert, Gulam Zia, Executive Director, Knight Frank India, Harsh Rungta, SEBI-registered investment advisor and founder, harshrungta.com. Rohit Raj Modi, Vice President, CREDAI and Director, Ashiana Homes. Sameer Jasuja, founder and MD of Prop Equity. Now, if I just look at what's happened, gentlemen, over the last 3 years, stock markets in India have had a strong bull run with the Nifty CNX clocking a return of 13.5%. At one point of time, the returns had actually crossed 20%. These 3 years have, however, been very dull for the real estate market on the other side. I think the last 12 months have been perhaps the worst that we've seen in a decade. Sales have dropped and prices have, of course, either stayed flat or even fallen in some of the markets. Now, most analysts have said that markets won't give more than 15% at the beginning of the year. But if I take 2nd January Nifty levels of 8395, Nifty is actually down with this latest bloodbath. So, what are we talking about? We're now coming to revisit, is there a connection between real estate and stocks, and should you be looking at real estate a lot more closely today, knowing that the volatility in the stock market can attack you? So let me first begin with Amrish Baliga. I think you've got a perspective on both sides, Amrish. There's real estate, which has been really dull. Somehow it didn't even do well when the markets were doing well. But now, do you need a fresh perspective?
Absolutely. I mean, if you look at the way real estate moves, normally it moves post the market move. Even the last move which we saw, once the market started moving from 2003 to 2004 onwards, you had the real estate following that. So I think even this time, in case we see the markets continue to move up, and again, I think most of us are talking of a long-term bull market because of the Modi government. So in case we see a decent bull market for the next 2 years, I think the real estate also can recover and start moving post that.
All right. So Amrish, what do you make then of the market meltdown? I mean, do you think that we are in a bull run and this is just a small global shock which was waiting to happen, and we will go back on a track of another bull run?
Absolutely. Unless, of course, the Modi government gets it all wrong. I don't think this is the end of the sort of intermediate bull run which we saw. This is only a correction which was, I think, overdue. A lot of us were talking of a correction. So I think this has happened because of the international scenario. And I think the pain would be there for a while. But then clearly we are on track, and I think we should see a decent bull run over the next couple of years.
All right. Okay, Kuldeep, what are your views? I mean, Amrish is actually not even talking of this week's major bloodbath that we saw. And he's saying, look, we're in a bull run, and it's generally real estate markets which follow the rise in a stock market. Don't you think the last 3 years' rise were good enough to have spilled over to real estate?
So I think there are two parts to this, Manisha. Part one is that it's not always a question of one or the other. It's a question of how much of one versus how much of the other.
Absolutely.
That's point one.
Yeah.
Point two is that, real estate is a slightly more complex. Second point is that, real estate is a slightly more complex asset class, in that it depends on A, are you doing real estate IPOs? B, are you doing real estate equity? Are you doing real estate debt? Are you doing it directly, or are you doing it through a platform?
All right.
Because real estate generally involves more active involvement.
This is for buying a property. Let's narrow down for the end consumer who says, hey, I have money, I can put into the stock markets, I can put it into an FD, I can buy some gold. How do I divide my portfolio? How do I balance it out, and how do I use the opportunities that the different markets throw to me? So let's leave out everybody else. Buying a property is, let's focus on that.
If you're buying a property, then clearly, with the long-term leverage that is available, the opportunity that is there and will be there for the next 6 months, maybe a year, maybe a bit longer, I think the bull run in equities will spill over. I think selectively in certain micro markets, we're already beginning to see that. You won't see that in luxury, but you are definitely seeing that in value for money units. Number one. Number two, you're seeing that both across residential as well as to the extent that retail is able to participate very, very selectively at the upper end on rent yielding assets.
Okay, so you're saying it's already beginning to happen. Sameer, can you see it? Because the data that we see, other than let's say some markets of Hyderabad and a few pockets in Pune which are holding steady, aren't we feeling the pressure that real estate markets have really touched probably rock bottom of a decade?
Absolutely, Manisha. I don't see any signs of any appreciation that has happened over the last 1.5, 2 years, except give or take some very, very few super luxury assets, in fact, and not the other way around. My view is that real estate from a retail perspective has to be looked at from 2 points of view, A, as an end user, or B, as an investor. If you're an end user, this is probably the right time to buy, and you should not be looking at it as an asset class. It's a home that you need to stay into. If you're looking it as from an investment point of view, multiple things come into place over there. First of all, real estate assets are much more safer assets. They're simpler to understand. They have a rental yield possibility, and there is an underlying asset beneath them that you can touch and feel, and you don't have to follow it, or you don't really need to understand the market that much as you need to understand stock markets or other markets, because they're really affected by the global scenarios. That's one. B is that yes, current markets where you stand today, there is a very good opportunity for investors to come and buy long term. Whenever you look at real estate assets, A, they are cyclical ups and downs, unlike stock markets to that effect. B, that they're illiquid, so you have to have the patience and the capability to hold on for a much longer time should you go into the wrong side of the cycle.
Okay, fair enough. So you need to have both, is what I'm hearing, to cushion one from the other.
Sameer is saying exactly the same thing which I'm saying.
Absolutely.
So Manisha, Sameer is saying, exactly what I'm saying, which is that at the end of the day, although the prices aren't moving because you're not seeing huge volume of retail, but the smart retail investors, whether in certain micro markets, are already beginning to pick up from an investment point of view as well as from an end user point of view. If you focus on the investment point of view, at the end of the day, if you were to consider the fact that A, you can get leverage against retail buying,
right.
B, that, prices are at a low, and see that, the economy itself is showing signs of strength, then over the next few months, you will have some of the best pickings that are there in real estate.
Okay, fair enough. Let me toss to Gulam Zia. Gulam, of course, being part of the industry, real estate, I know there are more voices saying that, look, it is an asset that if you buy, it's a hard asset. You get, the shocks of single-day meltdowns are less, so psychologically, it's a more comforting asset. But historically, if I look at it, any which way, stock markets have always outperformed real estate in any market globally, isn't it? Yet high HNIs and well-off investors also look at real estate in their portfolio.
Well, first of all, I don't believe that you should invest in real estate unless the value of your asset is doubling up every 5 years. And if it is not happening, then whatever returns you're getting are not really worth the money that you have put in this asset class. And also considering the risks that you're taking up if you have put it up for rental usage, or if you're putting up for, or just taking care of your properties, etc. Lots of headaches vis-a-vis the stock markets that you speak about. I may not have complete data to compare the performances of stock performance as equity performance vis-a-vis real estate performance. There are believers who want to, at least those who are sitting in Bombay who have seen some crazy bull run in Mumbai real estate, have always believed that real estate in Mumbai performs better than the rest of options. But even I don't believe the moment I generalize the whole country. If I look at other markets, the other regional markets, tier 2, tier 3 markets, definitely that's not the answer. And in any market, you will have one or two of these properties. Since you're talking about real estate, a couple of these assets, a couple of these properties which will definitely perform better than the averages. But weighted average of real estate property price appreciation does not give you much comfort. So as I said, I would not buy a housing property unless I'm sure in the next 5 years it's going to double up, and very few options available today.
Rohit Raj Modi, would you agree that even at these beaten down prices and a market where, if not beaten down, a market which hasn't gone anywhere on prices for the last 18 months, there aren't too many buys which will double up in the next 5 years? It's a big challenge thrown for the real estate sector.
You know, I think if we look at the statistics will bear it out that from 1980 to 2014, inflation-adjusted return on stocks and equities in India has been just 17.31%. Whereas if you look at real estate in the same period of last 34 years, we are talking about several times more, not few basis points, but several times more. So I think on a long term, real estate outstrips shares and equities, that has, in Indian context at least, and has been doing that in the last 25 to 30 years. And that's a factual situation.
Harsh Gupta, is that correct? I mean, that real estate has been outstripping. Okay, let's not take pan-India, let's not take tier 2, tier 3 cities. Let's take India's top 10 performing markets. Mumbai, where you live, is one of them, where people have made a huge amount of money. Gurgaon is the other one, where investments have actually been very, very prolific for many investors. Do you think that real estate actually outweighs, especially in India, the stock market returns?
Well, I would very much like to see the data based on which Mr. Modi is asserting that real estate has performed several times that of equity. I can't really think of any source of Indian data that says that. In fact, whatever data that we have seems to suggest exactly the reverse. I just actually want to take 2 or 3 points that you just brushed up. One, I think great thing that you did, Manisha, was to narrow down what you meant by real estate. You know, so that real estate means residential real estate in the context of a retail investor. I would like to say, please narrow it down further. Even within that segment, there are two parts. One part is what I call lending to the developer segment, and another is true residential real estate. Lending to the developer segment obviously should give you high return. It is hugely risky. I mean, no, we don't really, I mean, there are no laws that protect the consumer. Delays are rife. If I don't get a good return in underbooking property, in which other asset class will I get it?
Okay.
In fact, some interesting studies have been done that the return during the construction phase is higher, and ironically that is touted as a reason why you should invest in real estate. But moment the property is ready, post that, of course, it returns its asset class. It returns to the real asset class, which is residential real estate. There you do have some data, and I think that data seems to suggest that over long periods of time, over 10 years or more, the average return from real estate very, very clearly struggles to even come to about double digits. So I think very clearly, if you really define what real estate is, I think that will be an issue. The other thing that I think we should look at, you mentioned about shelter. So for it to be a shelter, you need asset classes that act differently. Gold is a shelter to to equity, because if you look at the past data, whenever equities haven't done well, gold has done well. Now that's not really true of real estate. I mean, typically, as somebody suggested in the panel, real estate adds with a lag. It acts with a lag after equities. So I don't think it can be a shelter. I think like any other asset class, residential real estate or generally real estate as an asset class is should be a part of portfolios. I just happen to believe that it should not be part of retail portfolios. I mean, retail portfolios can barely afford such lumpy investments that are so illiquid. That really was the point.
But Harsh,
that I
the
wanted.
surprising fact is that something's also wrong with our stock markets, and let's all accept that as well. No, let me make this point, Samir, and of course you can. I'm sure everyone has many ideas about this. Something's wrong. The retail investor you're talking about, Harsh, still wants real estate, right? The hard asset, and not going to the market. So there is a huge dichotomy on what is really good for the retail investor or will multiply his wealth, and what is it that he feels safe and secure with, despite the fact that you have a whole lot of developers there who probably have not delivered in time and the home buyers waiting. So why is that happening? I mean, Samir, come in here. I know you wanted to make a point, but keeping all arguments aside, over 50% of savings do go into the real estate sector. Why is there such a comfort with real estate even now in India? What has gone wrong with stock markets?
So,
there?
Manisha,
reverse the question.
I'll answer that. I actually have my portfolio divided 50% in real estate and 50% in equities. So I can fairly, and I've been in equities, guys, as much as I'm a real estate person. First, to answer Rohit's point, Rohit makes many times returns because he's a developer. So he buys agricultural land and multiplies it manyfold because of the licensing change. Otherwise, when you talk about the IRR return, Gurgaon and Delhi only have returned, and I've done a lot of work in this, is returned 18% and not adjusted to inflation returns over the last 25-30 years, and Noida is much lower, and so is Mumbai. So that's to answer how much real estate for a retail investor makes money.
Why is 18% low? 18% is a big number,
Not
Samir.
adjusted to inflation.
No,
and
even
that's why,
stock
so
markets,
I'm
you get
coming to
15,
answer,
16%.
and that's why I'm answering your question, that why do people love retail real estate? Why do retail people love real estate? The answer to your question is, first of all, stock markets are not easy to understand, very complicated, and most of the retail investors have lost money and never made any return unless they've gone through the SI monthly income investing route, or they've depended on the fund managers. Individual investing is super risky. They do not get it.
Okay.
As far as real estate investing is concerned, you don't have to be a scientist or understand the dynamics. It's only happened last 2 years where markets are really wanting you to understand the dynamics if you want to make money. Before that, you know, India was a map. You had a dart. You could put your dart anywhere on India and you'd make a return. And that's what the people in India are used to. They are used to making capital appreciation on their residential assets, and they made it all across the country. And that's why they have this fixation for buying more real estate. It's safer, easier to understand, and I know it's illiquid, but at least you have an asset that you can sell. In the stock markets, if you invest 10 lakh rupees, it could also become zero. That never happens in the real estate markets at all.
Okay, Amrish, now so let me come back to you, and you've been hearing the conversations. Okay, let's be very clear that both are needed in the portfolio, and I think if you as a retail investor also can afford both, why not? Would you agree with that? Or would you say that only after you've reached a HNI level, or the really HNIs would be the rich of India, is when you should look at real estate as an investment?
Real estate as an investment for a retail investor, I think that should come only after equities because of the amount of capital which is required. But then, I mean, investment into real estate as a home, I mean, the first home, yes, I think that's a must, and that should possibly happen even before equity. So there are two different types of investments in real estate. One is for home and one is as an investment. So, I mean, that way I'm quite clear that that should happen only after your equity investment. But regarding the other discussion which was happening as far as the returns from real estate, I think it is the recent memory which actually plays out, because if you talk about gold, I think, I mean, up to 2013, everyone wanted to invest in gold. Today, no one really wants to look at gold in a major way, because after that, like, it was the equity which performed. So similarly, real estate, whoever had invested between 2004 to 2011-12 really multiplied his money. But that really may not happen going ahead, at least in the near future, because clearly we are seeing that correction. And even after that, I doubt whether like real estate can give 100% returns in 3-4 years, even, in the visible future, even if you're talking up to 2016, 2017, I doubt whether real estate anywhere can give that sort of a return.
Amrish, you're saying that stock markets can. Stock markets have a far greater probability of giving 100% returns in 3 to 4 years than actually real estate. Real estate, we were setting a benchmark of 5 years. Gentlemen, I have to take a break. I will come back. Harsh, just one comment from you after this break, a wrapping out one between these two asset classes before we let you go.